agenda is in the chat. Pretty nice schedule in there, and as you can see. So we'll go ahead and get on started. So I guess kind of starting at the top, as always, with our recent events and news. And as always, feel free to interrupt and have anything that you would like to interject with. But kind of starting at the top, I don't know how to say this right, but the Sepolia testnet successfully merged, so we are one step closer to the merge of proof of stake. And I think the only testnet that's left is the Gurley testnet, and I think that's set for August 11th. And I've kind of heard, I want to say September 19th or around there is when people are kind of rumoring that the actual merge to proof of stake is supposed to take place. Obviously, that could get pushed back, pushed forward. Who knows? I would take that with a grain of salt. But ideally, that's hopefully when things will be kind of coming through, and should be a nice catalyst, or at least we all hope, to the price of ETH and just the whole ecosystem in general. But getting more excited about the merge coming up. Moving on down, KIP 26. That was basically empowering and extending the powers that our leadership team, which are JZ, our CTO, and Hazard, our CEO, have. That passed. I think there was only one objection by just one party, and so that passed basically almost unanimously. And so we are going to extend their powers, which really are mostly for compensation purposes. But there may be some other things that could have some discretion with those powers as well. But happy to see that passed, and hopefully that gives a little bit more reassurance to any kind of contributors that were maybe worried about that not going through. Kind of along the same lines. So that one passed again. But the next couple proposals, the Treasury team has been really at it lately. We have multiple proposals pending, mostly all in-house and on our forum, with one Optimism being on the Optimism forum. Again, that's that bottom one on the agenda. So I really encourage everybody to go check it out, throw their support up there. I don't know exactly what their process is to provide funding. But the more support, the more comments, for the better. It's really going to help our situation if we have support behind that. So really, again, encourage you guys all to go out there, take a look, and make your voices heard on that. So other proposals just kind of highlight the Treasury Charter, which is really just kind of creating a North Star for how we want to use our Treasury and how we view that. That is posted and really is just kind of high level document. Really how we should kind of create a culture around our Treasury. Establishing a testing wallet KIP. This is really just allowing us to put our hands in our destiny in our own hands with regards to how we can control how much funds that we can really kind of use in-house to identify new strategies, identify new initiatives, efficiency improvements that we can kind of embed into the protocol. Again, because a lot of this has mainly been externally driven before. So this is really giving us $600,000 between 4 different stable coins to kind of allow us to do that. So I'm really excited about that one. I know Zubair and Pi have also been a part of this process because they're close to the protocol, and I know that they may be excited about it as well. It looks like we have Zubair here, and he may be busy. But Zubair, do you have any comments about that one while you're here?
No, just looking forward to get it to pass, so we could use those stablecoin strategies to understand different kind of arbs and the different paths they end up taking, and tune our bot performance accordingly, and some of the other protocol improvements we are wanting to do. It's really just for understanding different types of arbitrages and how stable coins are involved, and pretty much that.
Cool. Thanks, Zubair. Yeah, and one thing to really highlight here and drive home, and I'm going to say this every time we talk about this proposal, but this is only stablecoin, so we're not taking any directional risk here. We're not trying to speculate and trying to buy up ETH with our stables or anything like that. It's literally just swapping between stables. So very low risk, really just kind of assuming additional smart contract risk, which is our own protocol. So in my personal opinion, very low risk all around, with some nice upside from data perspective, as well as just some rebates that we could earn off of that as well. The Bancorp proposal, this one is also up. This one's basically just allowing us or pushing for us to withdraw some funding from Bancorp due to the whole impermanent loss situation they have there. I encourage you to check out that proposal and make your voice heard. And I'll also say, in addition to this, we are also working on I don't want to say another proposal because that makes it sound like it needs to go through other governance, but a document of understanding of trying to pool funds from our strategic reserves to not only take over for what we hope to be pulling out of Bancor, but to improve our liquidity overall. Because I think that's something that people have been wanting for a while, and I think now's kind of the time with us having the Tokmak opportunity coming up with us pulling funds from Bancor. It's just a really good time to revisit the idea and the concept of our liquidity overall. So really excited to see how this one shakes out. We will definitely put this in front of you guys as a community as soon as it's ready. But really, just wanted to get in the hands of the people on the treasury reserves, or the sorry, not the treasury reserve, the strategic reserves, to make sure that everybody makes sense and there should be some funding available. I estimate there's about 30,000 plus Rook that could be leveraged for liquidity there. So more to come on that, but really excited to see what we can do there. The other one, I think the last proposal that's kind of in process, or not in process, but pending, is the non-core asset discretionary proposal. This is another one that Starfire put together in addition to the Bancor proposal, really just allowing us to have discretion over making rebalancing moves or liquidation moves over assets that are valued under $100,000, and this really allows us to maybe be a little bit more nimble with how we claim any kind of airdrops that we get or rewards or bribe rounds from our CVX position without having to go through governance and really clogging up that whole process and distracting the SOFONs as well as the Treasury team and just the community at large around each one of those things that are relatively immaterial in relation to our total Treasury size. So I'm really excited about that one. I think that allows us to really be more effective in how we kind of move through our positions in space as a whole. Starfire, I know you were part of two of those proposals. Jason, I know you've had your hands on those. Do you guys have any comments about any proposals pending right now from the Treasury side?
I would just clarify and reiterate that this non-core asset proposal doesn't give the official team, discretion to go out and buy non-core assets. This is solely for the liquidation and sale of non-core assets. And like Matt said, it just allows us to consolidate into core assets, which is listed in that proposal. And it's Rook, ETH, Wrapped ETH, Ren BTC, DAI, and USDC. So really stables ETH and our native token Rook. So.
Yeah, I just yeah, I guess I'd say I strongly encourage people to take a look. Having seen these, how they've evolved through a couple of stages, I think they're very strong and well-argued proposals and seem worth moving forward with. I also, and maybe this isn't the forum for that, but Matt, you mentioned in the past that it would be good to prioritize around these, given the number of them and the fact that it's summer and yeah, so it might be good to certainly, maybe not in this conversation, but another conversation to work out prioritization for those.
Absolutely. And Jason is a genius because that's a nice segue into my next point. But before I get into that, just wanted to do one last quick update on this section. Based on, I'm blanking on the number, our KIP, but the KIP that allowed us to withdraw our Maple Finance position as well as liquidate any kind of Maple rewards that have been accrued. We were not able to pull out of the funds, our USDC portion that is, but we were able to liquidate our Maple rewards, and so we will be continuing to try to withdraw our Maple USDC funds as the borrowers repay as scheduled. So really not a lot of risk there. Again, we were just trying to mitigate things from a just overall contagion perspective there. And definitely want to get into the priority of these pending proposals. But maybe before I do that, does anybody have any other events or any other kind of news that they'd like to share here? Okay, great. Well, go ahead and segueing into the pending proposals and trying to prioritize those. Again, we have four proposals that are currently posted on forums. So definitely a lot for the SOFONs to kind of understand, monitor, and really kind of give their feedback on. So I thought it would be a valuable, worthwhile effort for us as a community to kind of give a little bit of guidance from our perspective, what we feel is maybe the strongest or the most priority of those proposals. And so, I want to just kind of dive into that there. My initial thinking is, at least looking at the top priority one, is probably the Treasury Charter, because I think that sets the tone for a lot of other proposals that we have coming down the pipeline, from a Treasury management framework to other ones as well that are kind of higher level, more evergreen. And I think that's kind of a primitive that would be a part of that. So that's my initial thought, and I think even the Bancorp proposal and the non-core asset discretionary proposal even kind of reference our charter, which I think is appropriate, fine, and I don't think it has any issues. But from my perspective, I think that would probably be where I'd like the SoFunds to put their attention on first. But does anybody have any disagreements or any other proposal that they feel is maybe higher priority?
I almost think that they're almost in order. Because Treasury Charter, like you said, the Bancorp and non-core asset proposal kind of both reference the charter. So it'd be appropriate to have that go through first. And then the testing wallet is, directly correlated to our overall mission and fine tuning our platform. So yeah, I guess I'm in agreement.
Anybody else have any thoughts about this? The ordering? I didn't mean to put them in order in my mind, but that does make sense, and I actually agree. It just kind of naturally happened. Um, yeah, I think the only other order that I could switch is B and C, which is the Bancorp proposal and the testing wallet. I think the Bancorp proposal is pretty easy for the SoFunds to wrap their head around, and probably could be kind of lower hanging fruit and would allow us to migrate those funds from V2 to V3 and then subsequently withdraw them. Since, I don't think there is, more risk at this point than there was when this whole situation came to light. But I think that there's probably a slight amount more of time sensitivity around that one than our testing wallet. As much as I want to see that tested wallet get up and running, does anybody have any thoughts about switching those two around maybe?
Yeah, I think it makes sense to switch those around, especially since we're looking at deploying the Rook to other liquidity pools and things like that. Whereas the testing wallet, there's no timeline or deadline for that.
Okay, great. Well, I think unless anybody else has any hesitations or questions about that, I think I'll use the order that we kind of see in letter format here and just kind of communicate that to the SoFunds. Know their bandwidth and how many of these things they can knock out fairly quickly. But I'll try to get a feel for that and just try to get a sense for if there's anything we can do to help communicate what's in there and summarize it in a more compact way. But really appreciate that segue, Jason. And I think that was really it besides the normal protocol dashboard request link. Just always want to highlight that so our master stubs can kind of continue working his magic there. But does anybody else have any open floor items or just things that they'd like to put on the agenda for next week, or just really anything else that they'd like to kind of talk about here? Okay. Cool. So now we're kind of moving into the initiative collaboration section. So a couple things that we can kind of talk about here, and maybe in the essence of Zubair's time, because I know he's very busy on a lot of other things. Maybe we'll kind of start at the improving Rook liquidity. I kind of mentioned this in the first section, but we're not just trying to pull up Bancorp funds and not really having our solution long term. I think we want to come in and look at our liquidity overall at this point in time and see how can we improve it, and ideally maybe pull those funds from strategic reserves. And so if you go ahead and open up that link of the current document understanding, this is really where it stands right now. Again, this will be built out even more for the community as well as just the strategic reserve parties. But this is where it stands now. You'll see that there's not a lot of numbers in there from like what we hope to say from the perspective of like budgeted funds that we plan to invest in these pools and like these core reactors. But really, this is the kind of high level TLDR and a little bit of background about like our fees, how much liquidity we really have currently, and the different sources of that liquidity. the benefits, the risks, blah blah blah, the same typical things as well as some of the execution details. So I know Zubair and Pi have started kind of working on doing some analysis. So Zubair, you want to have any comments just about what you've seen from our liquidity and anything else about this that you'd like to talk about?
Yeah, so this came about from an anecdotal evidence that I had on basically trading on the platform myself and not getting any order to execute. And pretty much small orders starting from like $2,000, $5,000 worth of Rook, even 50 cent or 75 cents above the quoted price from CoinGecko. Um, so it just based on back of the envelope calculation, if you want to have a 5,000 Rook to USDC swap, uh, it causes significant slippage based on how much funds we have. So really, like in a pool of total value of 1.2 million, the Rook part is about 600K. So 1% of that is 6,000, right? So pretty much you're causing 1% slippage on a very, very small order or that size. I think it'll be a deterrent for a lot of people to just even be able to buy Rook. And I'm not even talking about whales. I'm talking about small to medium sized orders. So we should definitely do something about this liquidity situation. And since what we learned from whatever happened with Bancor, some of this should be done in a way that we're able to control ourselves. So token mark is one option, but Pi is looking into it in more detail in terms of the different risks associated. And we're also doing some detailed calculations on potentially the risk associated with beefing up the Sushi Swap and Uniswap with Rook liquidity pools. But overall, that's the direction we are leaning towards. Basically, just like adding more funds to these pools and getting better pricing for anyone who's trying to trade.
Cool. Thanks for that, Zubair. And yeah, really excited to see what kind of analysis that they're kind of cooking up with, and we can kind of embed within this document of understanding. I think that'll give a little bit more clarity on the direction and really the materiality of what we hope to invest in these different pools, which I think are all pretty battle tested. Uniswap's the big boy. Sushi Swap is obviously just very large as well, and then Tokemock. I think we're still assessing the risk and the different strategies there. I know Starfire has been really kind of pushing the limits there on identifying like what different type of strategies, what risks there are there. I'd say with Dietz as well, who's very much talking to a lot of those guys firsthand. And I think that he has a call this week or early next week with them, or not just him, but I think Zubair, Starfire, and some other folks all really kind of have a call with them to figure out our different things that we can do with that core reactor that we won. So yet to be determined there, but really exciting that we have that as an option. Starfire,
Yeah, and
anything else?
just
Heads ups.
yeah. So just to kind of add a little bit of color as well, like 45% of the liquidity for Rook is on centralized exchanges right now, and then it's like kind of the rest is splintered between Uni, Bancor, and Sushi. So it's not surprising that with such a small amount, plus most of that small amount being on centralized exchanges, why it's kind of difficult to trade. So, adding in whatever 30K, I think is like the max we could. It would make a huge difference in the liquidity out there.
You're talking about 30K Rook?
Yeah. And like right now, there's only like 80K between all of the exchanges and decentralized. So there's not much out there.
Yeah, we're definitely spread very thin, and that's why the price impact of big buy orders or sell orders is pretty significant. Actually, there are more sell orders than buy orders at this point, but even buying small quantities at a at a limit price is not that easy.
Cool. And I know Stubbs has started putting together our token liquidity dashboard, and this will get expanded, over time as well, and will is also embedded into this document of understanding. So another good visual way to kind of track our metrics around our different pools there. So again, thanks Stubbs for putting that together. Starfire, anything else from a liquidity standpoint that you have thoughts on?
I'm just reading Carnation's thoughts in the voice chat, and he said, "Have you guys considered doing a balancer pool?" And he mentioned it could be like 60-40 weighted Rook to WETH or 80-20. And I think balancer. Just reading his questions. I really like balancer. My fears are that we already seeded liquidity on Uniswap, and our sushi swap liquidity pool is decently sized, and I don't want to spread or fragment our liquidity across too many venues. That's my main concern or thoughts.
I would agree. The reason I'm leaning on adding funds to these two existing pools is number one, we know Uniswap is probably one of the safer options if there's anything safe, and Sushi Swap in terms of volume is not far behind. So those are in terms of getting our assets held up. They pose minimal risk than any other protocol, and we already have some funds there. So, I mean, starting a new pool is tricky because you need to at least have as much amount as we have in these pools, and even that is not good enough, right? So, taking these to a point where orders, I mean, I'm really interested in the orders ranging from $5,000 to $10,000, right? Small to medium size. Those should be fairly easy to execute.
Would your response be, Zubair or Starfire, or even Stubbs, if Carnation was saying, hey, well, what if we just took our funds out of Uniswap and put it into Balancer? Maybe that's a better situation. Do you have any thoughts on that question? Hypothetical question.
I don't know if I have any thoughts on that right now. I don't want to say anything and then go back on it.
Yeah, from a due diligence standpoint, I don't think, personally, I understand Balancer as well. So maybe that could be something we look into. Um, yeah.
I think the best reason for not taking out of Uniswap is just, I mean, people do go straight to Uniswap to trade. If everyone was going through aggregators, so it actually went through the best pools and everything, then I think it's easy to make that argument. But I think that would be the biggest reason not to. But I don't know if it's a good enough reason not to. So I do think we need to look a little bit more into it.
I've got a question. Are any of those liquidity pools functioning as oracles?
Good question.
I'm not sure.
If there is, we should prioritize deepening that pool.
I would imagine the Uniswap, if any, is being used for oracles.
I mean, both the Uniswap and Sushi Swap pool should be part of any Oracle, if I'm not wrong. So any Oracle is basically aggregating across those for sure.
One would hope. In the Bankless DAO, our Rary Fuse pool only uses our Uniswap v3 liquidity for its oracle. So you got to be careful.
It's good to know.
Okay. And what if there is no Uniswap v3 pool?
Well, I don't imagine you guys have a Rary Fuse pool. We chose that one because it was where we prioritized our liquidity and it was deepest. It was something that we could select when we opened the pool, if I'm not mistaken. but in their current market condition, I don't think they're opening any new pools. However, it's a poignant example in functionality.
That's a good point. We'll have to look into that and consider that as part of one of the attributes as part of this process. Looks like Wes just posted something that may be applicable here. But okay, great. Yeah, I think these are all good feedback. Carnation, really good idea. We'll look into that and do some due diligence on the balancer and see if that's a viable option as well. Does anybody else have any thoughts about the document understanding or just liquidity as a whole?
One thing I've not heard discussed so far is the percentage liquid Rook versus total supply and or treasury supply. And those two ratios should be a major function of the liquidity discussion, because if the liquidity depth seems small in USD terms, but in terms of the Rook economy, it's large, then that slippage is warranted. And that is true growth measurement. And so it may not be the enemy in that case.
Yeah, I think one thing to consider here is really opportunity cost on that Rook. Because I totally understand what you're saying, but I think the Rook that's in our strategic reserve that's kind of been earmarked for liquidity provisioning, there's basically zero opportunity cost by not putting it in there. There's risk of impermanent loss, obviously, but from an opportunity cost perspective, it's almost like we should try to do this because it's just going to create more benefits with relatively lower risk from my perspective. It's a good thought.
Yep, point taken.
Well, Zubair, any other thoughts? I know you probably have to run and go do some other things, but
No, thanks for putting all those proposals together. I'm very excited about definitely getting to see them pass just to improve overall liquidity and efficiency of the ecosystem and learning more about how we can improve the protocol. So all of these proposals are very important for those functions.
well, thanks for stopping by, sir. Okay, maybe one last chance. Anybody else have anything on liquidity that they'd like to get out there?
I think Carnation has another question. Is Rook listed on any lending protocols?
I don't think there's any major ones.
Yeah, I'm not aware of it.
Yeah, I think I remember like being at permissionless and I saw that we were listed on something, but I didn't even know, and it was like liquidity was way too small. It wasn't even viable for any actual true lending. So yeah, I don't believe so. No. I think that this part of this process could allow us to get listed as, I know that's a big requirement by these lending protocols. So, once we improve this, that could be a more viable option to pursue. Okay, cool. Well, moving on, maybe we'll go into the ETH deployment execution plan, and I'll kind of let Starfire take this part over.
Sure. I would like to preface that I'm not a professional trader. So if there's any criticisms or any advice or any things that you guys think should be changed, please don't hesitate to make your case known. The idea behind, I'll just walk through what I have set up. So I have on the top left, price of ETH, which could be updated or should be updated, but you'll see the ETH allocation table with our three liquid staking providers, Stakewise, Rocket Pool, and Lido. And then to the right, you'll see tranche 1 to be deployed hopefully this week, and it's about 20% of the overall ETH allocated to our liquid staking strategy. And kind of in an effort in just like acquiring potential deep discounts, I thought we should go ahead and layer our limit orders and kind of base this off of previous volatility that these different liquid staking derivatives have seen while priced against ETH. And there's a chance that even at this top level, that these don't get filled, which is I'm kind of interested to see, or I want to get these posted as soon as possible on the Rook app. But I think that the top limit orders should hit and fill in full. Um, but if they don't, or and they aren't even getting partial fills, we can layer another one on top and execute afterwards. But the idea is basically to have protection in case deep discounts come across. If something was to materialize, we're able to take advantage of that discount, and then also, prioritize getting filled regardless of price, because we're not the motivation behind this proposal was not to make a trade based on the discounts. That was something that evolved independent of this, and so we're just making sure that we have the opportunity to take care or to take advantage of those discounts if they materialize.
Cool. Yeah, thanks, Starfire. Another thing I'll kind of say about this is like, we're trying to be systematic and disciplined with how we kind of deploy this capital. But in the end, like, it's only going to make so much of a difference. Again, this is just ETH going to an ETH derivative. So, it's really more about what do we feel about, again, in air quotes, the peg. And I think my personal opinion, I know I talked to Starfire and maybe something else we can discuss, is really just, do we think that there's going to be a more degradation of the peg, like SDETH and RETH2, or SETH2, and things like that. And, my personal opinion is that a lot of the discount we've seen before is probably not going to be seen again with a lot of this contagion risk and these liquidations that have happened. I think a lot of the fear was causing those to be pushed down. And then again, it's all dependent on the merge, because that's when things unlock. So as we get closer to the merge, there should be closer and closer parity between the prices of these. So, I think we are, again, this is my opinion, in a race against the clock to some degree, to get these deployed and take advantage of this discount, as we have, 1-2 months, if everything that has been said about when the merge dates are happening is correct. So, again, we can just kind of deploy these a little bit quicker, but just trying to be systematic is something we should kind of strive to do. But does anybody else have any thoughts about this approach, or if they have any recommendations to how to improve it? Okay, cool. So yeah, hopefully we can get those deployed, or at least these limit orders placed this week. I need to get with the multi-sig on that. If at the very latest next week we have another multi-sig day already scheduled. So hopefully in the next week or two we should have these assets, at least 20% of them deployed, which I'm excited about as well, because I know there was a lot of work and effort and time discussed behind these proposals. Okay. Great. And so I think the last thing we wanted to get into was really just kind of around our stablecoin working group. I'll post our matrix here. I know I've started doing, well, not me, but the Treasury team has started doing some research around the ones that we feel more strongly about at this point, in addition to what we have listed on our stablecoin matrix here. I think we've talked before, and I think, we have some soft consensus around like placing the most amount of our capital, our stable coins, in kind of the blue chips, the ones that we feel very secure about, because in the end we want our stable coins to be stable. But I think that raises the question of, especially with these blue chip names, rates being so low, is it worth it? I think, let's just use Aave as an example. I think the risk around depositing an Aave just generally is very low. It's very battle tested. We've seen some major drops in their liquidation process, has gone off without a hitch. It's really been impressive. But, it's offering, 0.5% on DAI right now. So, there's smart contract risk, and we have to ask ourselves, is that smart contract risk being assumed, greater than the small yield that we are getting off of that? I think in a bull market, it's easier to rationalize that because rates are, drastically higher because there's more demand for that. But right now, with us kind of being in a lull, I think we probably need to figure out, like, hey, is this truly something that we need to pursue at the level we hope? If so, like, we just focus on the more moderate and higher risk opportunities, but really just keep those investments minimal, because again, they are higher risk, and that's not personally like what I want our treasury to be assuming. So we'd love to hear a little bit of conversation around what people feel is kind of a minimum rate that they'd like to see before investing, if they even believe that is something to consider. Starfire, I know we talked about that. You want to relay your thoughts here?
I think Breeze was going to say something. Breeze, you want to hop in or I
Yeah,
can?
yeah, for sure. Yeah, I definitely think it's something to consider for risking X amount of stables for just like 1 or 2% versus our ETH deployment. I think we're getting around 4 to 5% right now. So that being said, even though Aave is a blue chip in the space, I'm not too sure if it's worth to even go that route.
What other people feel?
I mean, my gut is telling me it's better to be yielding something than to be yielding nothing. But maybe even just like pushing forward with the proposal and then kind of I don't know. I guess I'll just default that I think yielding something is better than yielding nothing, but it's kind of balancing the risk associated to make sure it's worth it.
Yeah, so my thought is kind of part of the risk is not just if there's smart contracts or things like that, but also that in the future we're making decisions based on investments and potentially seeding something like B protocol where it's like we're going to integrate with them and looking at our stable balances saying, okay, we have X amount, but that's just X amount that is not already in, Aave making 1.3%. So I think that there's more to it than just it's either sitting there or it's not. And in my opinion, I'd rather not get our funds kind of locked up in other areas, and potentially make decisions based off of that when it is only giving a couple percent.
So I was just gonna, can you guys hear me?
Sir?
Yep.
Yeah, I was just gonna remind people that although your stable coins are stable relative to fiat, your fiat is losing value relative to inflation.
Yeah, I think it's a point that's been referenced here before, and I think it's something to always kind of keep in mind. I think we're always battling inflation, and there's different ways to do that. I think like, and I mentioned this in the chat a while back, but until ETH or Bitcoin and things are denominated in that, and again, our biggest expense is contributor compensation. So until we can, and those contributors are relying on a denominated form of asset like Bitcoin or ETH that they don't really care about the volatility. We unfortunately need to have a really heavy presence in USDC or some other stable coin. And so, these investments that we would make would not be trying to surpass inflation, which hopefully is, somewhat I don't want to say temporary, but at least not as accelerating as we are seeing right now. But these investments will be hopefully just kind of combating the impact of this inflation. And another thing I'll say is due to the nature of us being a protocol and really just code being kind of the driving force behind our value, and not really commodity or other kind of material based inputs, like a traditional business might be. We're not as impacted by inflation. So inflation really is more just about the debasement of what you can buy. It's a representative of what you can get of a basket of goods, and our basket of goods really is only headcount, right? Like that's really where a lot of our expenditures come from. And so until we get to the point where contributors are so impacted by this debasement and inflation and are almost required to ask for a raise, which could be a potential. We really aren't super impacted by inflation overall, but I think it's something to always kind of keep in mind again. But just drive home, not trying to beat inflation with these investments, just trying to combat it as much as possible. But I think right now, like we should continue focus on driving forward integration opportunities and depositing funds with those integration partners and other strategic partnerships. I know we have one with MStable in underway. We've gotten really great returns there. So I think another option we have is, just beefing up our investment with them, finding other situations where we can find that integration where, even if we are assuming a little bit more risk as compared to like in Aave or a compound, we're making up for that reward risk ratio by the fact that we can kind of obtain additional order flow and future MEV and Rook burns kind of in perpetuity as long as that protocol succeeds. So I think that's the optimal situation, but again, just need to continue driving forward on the integration front. Anybody else have any thoughts about stablecoin deployment? No? Okay. I think that was everything I wanted to talk through today. I think we went through that pretty fast. Again, if anybody wants to get involved in the stablecoin working group, please let me know. We are definitely not far enough down the process to where it's like, hey, nobody else can kind of come in and join. The more the merrier at this point. I think we still have some ideas of protocols that we can kind of investigate and do our due diligence on, but as of right now, we're just kind of in the initial research phase. I know I've finished up with my research of Aave. Working with Notional Finance right now to kind of come up with my research. I know Starfire Stubbs, Breeze, and I believe Wes as well also have been kind of pushing forward on some other.
You there, Matt?
He keeps rugging himself in these conversations.
Yeah. Let's not lie, baby. We be both on each other's mind.
Whoops. I guess we'll give it one more minute to see if Matt can connect, but if he doesn't, it sounds like he was getting ready to wrap it up. So just give it one more minute.
Everybody here? Can you guys hear?
You are
Loud and
back.
clear.
Cool. So yeah, I don't know what's going on. I had to hop on mobile. I don't know where I left off. I think I was just leaving off, really just saying I think that was everything I had today, and was kind of questioning. Did anybody else have anything that they'd like to get out there from anything we discussed, or anything they'd like to put on the agenda for next week? Okay, cool. Well, I appreciate your time. I know one other thing that we'll have on the agenda next week, in addition to some of the things that we'll probably go through again that we talked about this week. But we're getting closer to our CVX unlock date, so I know Kyle has been doing some researching behind some ideas that he wants to come up with, some different strategies, and so we'll probably have a discussion around that next week, and definitely want some everybody's feedback on that, because again, our unlock date is rapidly approaching. So. Appreciate all the time, everybody, and looking forward to next Tuesday. And enjoy your day and go touch some grass.